I'm stock trader Lance Breitstein. Let's answer some questions from the internet. This is Stock Market Support. Conqueror Khan asks, as a trader, what is your response to the question, what do you do for a living? As cliche as it is, we're always trying to buy low and sell high. The market, especially when there's breaking news, can move so fast, and there's no room for hesitation. If a headline comes out, company A is in talks to buy company B, that company B's share price will shoot up within seconds. So as a day trader, it's my job to try and process that headline as quick as I can. Then if I think it's going to be positive for stock B, I want to buy that stock as quickly as possible, and all of this elapses in a matter of seconds. At Vivek Investor asks, when to sell a stock? $1 million question, right? Answer, when people who are not familiar with the markets are talking about the specific stock. Well, Vivek, I actually think you have a really great point there. As a trader, we often want to be placing our bets before the euphoria, before people are super excited. And so often, tops in a stock really do align when investor sentiment just gets too hot. When is the worst time to sell? Generally, the worst time to sell is going to be when stock prices are falling so quick, and you feel that panic in your stomach, and all your friends are scared. In those times of panic, you really want to follow Warren Buffett's advice and do the opposite. As they say, when there's blood in the streets, that's when you want to be buying stocks. At the Finance Pilot asks, does the stock market feel like a casino to you? If you were to pick 10 random stocks for me to trade, that would be like taking me to a casino and sitting me down at a random slot machine. Over the long run, I will lose. But if I'm able to pick the specific tickers, then all of a sudden, rather than sitting at a slot machine, it's like me sitting at the poker table. And sometimes at that poker table, it might happen that I get pocket aces. And while I might get pocket aces, I can never guarantee the outcome of that hand. But what it does allow me to do is occasionally stack the odds in my favor, so that if I bet properly and play my hand right, in the long run, it allows me the chance of beating the market. At Abhishek Kar asks, why do big traders use so many screens? If you've ever seen a picture of a trading floor, you know that this is absolutely true. I myself used 6 screens for my trading. Why do we do this? It's because we need to be glued in and cued into so many different things. So on this top left here, you'll see my watch list. That will be a list of all the stock tickers that I'm looking at that day. Every trader has their watch list. As part of their preparation for the day, they decide what stocks they want to look at so that they're really cued in to how their prices are changing over time. Right here, that box is the live news. It feeds in all the news headlines on a specific stock ticker, and a lot of that news happens through a Bloomberg terminal. A Bloomberg terminal and the keyboard is one of the critical pieces of hardware that you'll see on a trader's desk. All of these color-coded keys really help you interface with the Bloomberg software. It really comes down to speed and precision so that traders can do exactly what they need to do as quickly as possible. Right here, we have the level 2 box. On the left, you have all the bids. The bids are anybody out there in the world that wants to buy that specific stock. You can even see the price. Then on the right side is the ask. The ask is the price and size of every single person out there that's looking to sell the stock. When you have the price intersect, that's when a transaction occurs. When we look at this stock chart, there's a whole lot more to it. In fact, there's a whole science essentially of trading, and that subject is called technical analysis. At Cookie Cokes wants to know, what is technical analysis? Technical analysis is a really big word for essentially the essence of day trading. What we have here is a chart of Tesla. This is just Tesla's stock price over time. The bars will be green when the price goes up. The bars will be red when the price goes down. And so when we look at this specific chart, there's a couple things we notice. First, overall, this is what I would call a strong stock. Stock prices are going up and towards the right, which means it's increasing in price. We see a little bit of a volume spike around news, and then the price spiked as well. The most volume tends to occur either at the open or the close for most stocks. So that tells me that something atypical happened there. I suspect it's very likely that a piece of news occurred that drove that price higher and increased all the transactions in the stock at that time. Another thing this chart tells me is we spent spent pretty much the whole day above that yellow line, the volume weighted average price, or VWAP as us traders like to call it. It takes every single transaction that occurred in the stock, it multiplies it by the price, and you get essentially the average price based on the volume that occurred there. A lot of traders like to think that if a stock is trading above that VWAP line, that's a bullish signal. In other words, we suspect that the trend might continue higher. If a stock is trading below VWAP, we take that as a bearish signal. In other words, we interpret that as the stock might continue to head lower. At PMcQ asks, what factors make a stock a good buy in your opinion? For the most part, you really want to invest for a long horizon because over time, the stock market does tend to go up. However, as a trader, we take a much different approach. As a day trader, I really want to stick to stocks in play. What does that mean? I want to be trading the stocks with the most volatility, the biggest changes in sentiment. I want to be trading the AMCs and the GameStops when they were going crazy. I want to trade the Reddit IPO. So what happens if a stock doesn't move? Traders can't make money. So you can bet that we're really looking for the excitement and the big moves to make the big money. At Frost Ace Real wants to know, why the f are people buying into GameStop all of a sudden? Why do you want to invest in mid? All these meme stocks are amazing opportunities to trade and make short-term bets as long as you have the experience to end up on the right side of it. So many people are aware of the GameStop phenomenon and the whole movement of so-called meme stocks. A meme stock is a stock where its price is largely influenced by the whims of social media and different memes online. Many might even be familiar with what happened in 2021 with Keith Gill, aka Roaring Kitty, who was a financial analyst that really came to have the belief that GameStop shares were undervalued, and he almost created somewhat of a populist movement where people wanted to buy GameStop, where a lot of large hedge funds and institutions were betting against the stock price performance. It became this calling of sticking it to the trader man and sending that stock to the moon. It happened again recently as Roaring Kitty came out on Twitter for the first time in years and tweeted a meme. And GameStop went from $10 to as high as $80 pre-market one day as a result of that tweet alone. You might have heard of friends or coworkers that have made money with bets on GameStop or AMC. What we say in stock world is what rises really fast so often comes crashing down just as fast. And we saw GameStop tumbling down back to $20. So if you're investing and making some of these trades, you can lose 100% of your capital very, very quickly. I highly advise against doing any of those crazy bets unless you are a skilled trader. At J. Ted Scott wants to know, why did they choose bear and bull to describe the market? Why not bull and scaredy cat or bull and chicken? As you can see this good old bull on my desk here, the way a bull strikes is it strikes upwards. And a bull market is used to refer to a stock market when prices rise by 20% or more. On the other side though, a bear strikes downwards. And by technical definition, a bear market is when prices fall from the highs by 20% or more. An example of a bear market is what we saw during the Great Recession in 2008, and even what we saw during the early stages of COVID in spring 2020, when markets fell precipitously to try and price in the risk of COVID spreading around the world. At Flybry wants to know, what is the Warren Buffett secret to success? I think many people have heard of Warren Buffett, and it's because he really has one of the best track records of investing of all time. He is invested through every market cycle imaginable, every boom, every bust. That knowledge and the hours he spends poring over financial statements allows him to have an informational and a psychological advantage over the rest of the market. The average person out there wants to follow Warren Buffett style investing advice. Index funds are often the way to go. You want to invest for the long run, you want to buy more when others are fearful, and you want to have the long time horizon and capture the growth and success of the American economy as a whole. At Mitesh Enger asks, what is the driving force for a stock to move? The stock price and what causes it to move is simply whatever people are willing to buy and sell a stock for. But what people need to realize is so often stock prices don't reflect the true economy, but perceptions of where the future economy is going to go. Let's take a case study. Everyone out there has heard about this huge AI boom. So who will be some of the beneficiaries from this AI boom? One of them is NVIDIA, which is making a lot of these chips. So if you were to look at the share price of NVIDIA, you're going to see that over the last couple years, it has just absolutely exploded. They're creating so many of the chips that powers this AI boom. A lot of investors want to participate in what they view to be the future of growth and innovation. How many chips will they sell? What will the profit margins for this company be? And what are we willing to pay for it today to compensate for those unknowns? That is what the stock market really does. At Viv Bajaj asks, do you trade stocks based on news? Yes, yes, and yes. Part of our job as traders is to figure out what are the implications of that news, and then what does it do to the stock price. At the start of the war in Ukraine, we saw investors rightfully start to panic due to the increased geopolitical risk. On one of those days, Tesla sold off along with the rest of the stock market. But then what happened is later in the day, when some of the fears settled, people started to buy Tesla on the second implication, which is if oil prices shoot higher, what might the implications be for electric vehicle adoption over time and the prospects of Tesla as a company? At Angelo Terzo 2 wants to know, is the trend really your friend? I would say a resounding yes. It is so important to stay with the trend. One way that I like to illustrate this point is what I like to call the right side of the V. Even though A and B are at the same price, I want to be on the right side of the V because this green line is the stock price going down, 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 down. And at point A, when we're at $50, you still don't know how far that stock might still have to fall. For all we know, it could go to 40 or 30 or 20. That's why it's so much better to buy at the right side of the V when you're with the trend. That tends to have higher expected value because now that we're with the trend and these trends tend to continue, that puts the odds much more in our favor, and it's a way safer way to invest or trade. At Matt Ryan X wants to know, okay, wait, a real stock market question. How does the stock of a company in any way actually impact the company and its well-being? When a stock goes public for the first time, that's called the IPO, or initial public offering. So whatever that IPO price is at, that's actually the proceeds that the company will get. So if the company were to sell 1,000 shares at $100, they would be raising $100,000. But if that stock then went up way higher after that IPO, they actually wouldn't directly benefit from that. While the day-to-day price of the stock doesn't directly influence a company, a lot of the shareholders might own some of the stock, so this can have implications for morale and also just corporate funding decisions, like whether to raise money through debt, essentially issue bonds, or raise money through equity by selling stock. At Rashab Midas asks, why top stocks are called blue chip? The term blue chips comes from the fact that back in the day when people were playing poker, the most expensive chips were the blue chips. That term was then adapted to refer to stocks that were some of the biggest, most profitable, stable, and respected companies in the economy. In the US, we traditionally referred to blue chip stocks like GE or Ford or General Motors. But nowadays, it's a different guard made up of companies like Apple, Microsoft, and Nvidia. At Murphy wants to know, so I'm rewatching The Wolf of Wall Street. Any economics nerds on here know how accurate it actually is? It's definitely a classic. That is the true story of Jordan Belfort. What he was a part of is what's called a pump and dump scheme. People back then, and still to some degree today, buy stocks for themselves and their company, then try to pump the stock price up, promote the stock, and push up the price, and make a lot of exaggerations to potential investors that will get them to buy the stock at a much higher price than you bought it for, creating all this excitement and almost false narrative to suck people into buying the stock that you have, with a huge conflict of interest in that you're often selling it to them at a higher price. At Keep Quizzing wants to know, what are some stocks that can give 1,000% returns in the next 3 years? A lot of people in the stock market world, especially with Instagram and TikTok, they're going to promise you things that are totally impossible. Much like poker, this is a probabilistic game. I can identify situations that are in my favor, but never ever would I be able to promise anyone anything like, oh, this stock will return 100% or let alone 1,000% in a couple years. Anybody that's making these dramatized claims, a lot of that is not only not true, but some of it might even be illegal. At chefboyrdj_ asks, how does the stock market crash? Just uncrash it? If only it were that easy. But as to why the stock market crashes, it's because sometimes there's sudden events that results in this feedback loop where so many people want to go for the exit all at once. We have an expression in trader world. It's okay to panic as long as you're going to be the first person out the door. But if everybody's already exited and prices have dropped precipitously, then it's just too late and you often are better off sitting tight. One example of probably the biggest stock market crash is is on October 19th, 1987, Black Monday. The stock market fell a whopping 22% in a single day. That is almost unfathomable for me to imagine. @VoltTrader wants to know, what can emotional trading or psychological pressure do to your trading in the financial market? The reality of being a trader is that it is one of the most emotionally and psychologically challenging jobs out there. So often the average layman will be selling during the panics when we want to be buying. So what a pro trader does is we override those base level emotions and we try to buy when people panic and then sell when people get euphoric. Here's a scene from Billions I really love that portrays this topic well.
You got to be able to withstand the pressure or it'll crush you.
Here in this scene, he's saying, I don't lie to myself. I don't hold on to a loser.
I let it go. Get away from it.
If you have years or decades of experience, your intuition is actually giving you very useful knowledge, telling you that something is not acting right. And when that happens, I try to always listen to my intuition. @Slimmerella says, I'm gonna be real for a sec. I have absolutely no idea how the New York Stock Exchange works. Like, I don't get why everyone is just running around yelling in earpieces. I just feel like there's a more calm way we can tackle this. I totally agree, Slimmerella. And a lot of that craziness and the running around and the screaming and yelling has actually gone the way of the past. Yes, some floor trading does still exist. The New York Stock Exchange still has their floor and their different areas for some of the different stocks, but the overwhelming majority of stock trading is all done through electronic trading using software and the internet. That being said, it is true that when you see those people yelling and screaming, a lot of those people are taking in orders, some still by phone even, and they're trying to process them through the system to eventually find the best way to place them in the market and get the best pricing for their client. @Perceptive Trader asks, what sets apart pro traders from amateurs? The difference between elite and amateur is massive. A lot of what a trader succeeds at is pattern recognition. The more experience you have, you can notice all these nuances that an amateur doesn't stand a chance at noticing. The same way that Tom Brady can read a defense and know where people are going to move before they do it, it's that difference versus being a high school quarterback. So those are all the questions for today. Investing always involves risk, so do your own research or consult a financial advisor before making any investment decisions. Thanks for watching Stock Market Support.